Today I'll go over the 3 most common mistakes most traders make when working on their win rate. And I think this is what is stopping a lot of people from succeeding, unfortunately. So let's make sure you know about them. I'm a money engineer, and with my master's in machine learning, I've helped traders get funded and get payouts using data science. But before we move forward, let me ask you this. Did you ever come across a trading journal on YouTube with a super high win rate, but you were still unprofitable with it? Well, I explained the reason why using this trading journal. We'll go over a 4-month journey for this trader. He is unprofitable, and I have here 36 trades over a period of 4 months. And at each month, this trader will be making a very common mistake. Still, you can see that he has an 80% win rate. So how is this possible? Well, let's look at the data. So we have here the monthly report. You can see that October was amazing. He had an 83% win rate with a return of 9K. Amazing results. Nothing to do here. November, even better win rate. He had a 100% win rate with a return of $8,000. So very nice right there. What about December? Well, this is one of the 3 most common mistakes that I see when I'm looking at traders' data. And it is the win to loss ratio. Look at the difference between his wins and his losses. And you might think that this is not very common. Well, I'm telling you that I've been looking at data for a long time now. And this is very, very common. You see that all of those small wins are simply people either getting fear and stopping out their wins way too early, people taking partials and then closing the entire trade when they feel like it's not going in their direction anymore. And all of those big losses are people holding on their trades. It is so interesting to see how the human brain is working. People will usually hold their losing trade until it hits stop loss, but will be very quick to take profit once they see a very small amount of profit. So this is the very first mistake that I see in the data of a lot of traders. But you can see that the win rate is still very high. All of those small profits are wins in the head of the trader. And this is what is boosting the win rate. So how can you solve this issue? Well, this is a very broad subject and I'll have to do a dedicated video for that. But you can see that the win to losses size ratio is not great at all. This is a very, very low ratio. You can see that when this trader is taking a loss, he's taking a big loss of $6,000. But when he's taking a win, he's taking a small win. And you need to be careful because maybe this trader at the time of taking the trade, he was going for 12K return. This would make each of those trades for 1 to 2. But at the end of the day, what this trader is doing is closing way too early or taking some partials very, very fast and not letting their trade go to take profit. And what this creates is a very low ratio. So to solve this issue, you need to make sure that your actual risk to reward in your data is above a 1 to 2 in my opinion, or even above a 1 to 1.5 is good enough. And this is not based on where you were supposed to take profit. This ratio should be based on your trading data because your trading data is the objective performance and how you're actually doing in your career. So this was the first mistake for December. Now, if you love to move your stop to break even, you need to pay attention to this second mistake because this is maybe the reason why you have a very high win rate and you're still unprofitable. And this mistake is happening in the month of January. This is another very common thing that I'm seeing. A student will come to me and tell me that I have this 70% win rate, it is awesome. But when I take a closer look at the data, I see that most of his trades are break-even trades. And this is what you get. A very high win rate because this trader will consider those break-even trades as wins and a very low return. Very, very common mistake right there. So if you look at your journal and you see that you've set your break-even trades as winning trades, you're currently doing this mistake. Personally, a break-even trade is a losing trade, but this is only based on my own strategy. And this second mistake can be combined with the first mistake because what will usually happen is that people will go break-even and take some partials. So for instance, there would be a case like this one. Take a small partials of $500 and then put the rest at break even and they will consider that a winning trade. And this is totally false. Other people would just go break even and not take any partials, and this would be the type of results that you will get. High win rate, very low return. So make sure you do not make this second mistake also. And then the third mistake, and unless you've been told about this mistake, it is not the first thing that we think about when we're looking at the data. A lot of people will simply say that I found this 80% win rate, which returned 50K this year. And this is awesome. But there's something that you need to be very careful of. And I don't know if you already caught it when I was doing this analysis, but it was right in front of your eyes. You can see that October and November were very profitable, a return of 17K in total, with a very high win rate. However, the last 2 months were very unprofitable, minus 21K, minus 2K, but still a very high win rate. And this is where you need to think about the win to loss distribution over time. Maybe you have in front of you an 80% win rate, but maybe all of the wins only happened 7 months ago. And since then, all of the months right after were all unprofitable. There's nothing we can do with such a strategy. Maybe this was a strategy that was working very, very well during COVID years. But since then, we only saw losses. Another instance where we have this type of issue is, for example, last month we had 20 trades, all profitable. We did extremely well. But this month, we only saw 1 or 2 trades, and both of them were losses. There's nothing we can do with such a strategy. It is a high win rate strategy. It is technically very profitable when we're looking at a year-to-year return, but the most recent months are all unprofitable. So what can we do to solve this issue? Well, you need to look at the distributions of the wins and the losses throughout the year or throughout your data sample. Preferably, we would like to see the months being close to each other, both in terms of number of trades and both in terms of losses and wins. Of course, there are some months like December, January, or the summer months, which are usually less profitable than others. But overall, especially through multiple years, we need to see consistency. A lot of time when I'm looking at my students' data, those are the type of things that I'm thinking about. How's the distribution of wins and losses? How are the break-evens? Is he going break-even or taking partials? Is she considering a break-even trade as a win or as a loss? So I hope you keep in mind those mistakes when you're looking at your own data or any other people's strategy, because some YouTubers could come out and say that they have this 90% win rate, but it's only been working during the internet bubble in the 2000s. There's nothing we can do with that. So just be careful out there. And if you're looking for a trading community, not focus on golden strategies, but only on data, data science, AI, and data analysis, look at the link in the description. See you in the next one.